Hello everyone. In this session, we are going to understand GST. But before we proceed with understanding the concept of goods and service tax, first of all, we shall understand the meaning of taxes itself, uh, and then we shall proceed with understanding in depth the meaning of GST also. Now, if you go by the definition of taxes, it says that a tax is a legally compulsory payment imposed by the government on income and profit of persons and companies without reference to any benefit. So, if you try to interpret this definition, the very first statement says that it is a legal compulsion to pay the tax. Okay. So, what that means is that tax can't be avoided. So if someone tries to evade the tax or avoid the tax, then it will be considered as an illegal activity, and the penalty or legal action can be taken against that person by the government. Okay. And it is imposed on income and profit of persons and companies. So in case of persons, it is imposed upon their income, and in case of companies, it is imposed upon their profits. It is paid without reference to any benefit. So it says that there is no guarantee of benefit by the government in return for the payment of taxes. However, the benefit is provided by the government in terms of infrastructural facilities such as construction of roads and construction of government schools, hospitals, and providing subsidies on various types of goods. So these are the kind of benefits that is given to the individuals by government. However, there is no guarantee that is given. All right. Now, the taxes are broadly classified into two categories, that is direct taxes and indirect taxes. So direct taxes are basically income tax, okay, and indirect taxes are charged on goods and services. So our major focus of discussion will be indirect tax, because GST is an indirect tax. So you can use the term indirect tax or GST interchangeably. Both means the same thing. All right. Now it says that liability. The very first distinction says that uh, in case of direct taxes, the liability to pay and the burden of direct tax falls on the same person. So someone who is liable to pay the tax will only pay the tax. No other person on his or her behalf can pay the direct tax or income tax. Okay. But in case of indirect taxes, the liability can be shifted. Let's understand this, how it works. So consider an example of a producer or manufacturer who sells his goods to wholesaler, then wholesaler sells it to retailer, and retailer finally sells it to consumer. Now whatever tax the manufacturer has to pay to the government, he'll collect it from the wholesaler, and wholesaler in turn will collect it from the retailer, and finally the retailer will collect it from the consumer. So consumer is the final payer of taxes. Okay. And this is the reason why GST is known as destination based tax. Destination based tax, because tax is finally charged on the place where the goods are consumed. So consumer finally consumes it and pays the entire tax burden. And this is the reason why GST is known as destination based tax. Okay. Now, the next distinction is burden on the tax cannot be shifted to others, it's burden. So we have already seen this in the example here. Now, direct taxes are considered progressive and indirect taxes are considered regressive. Now, how this happens, let's understand this with the help of an example. Suppose there are two persons, Mr. A, Mr. A, and Mr. B, and they have different level of income. Mr. A earns rupees 1 lakh, Mr. B earns rupees 2 lakh. Okay. So, in case of direct taxes, let's first of all take the example of direct tax or income tax, you can say. So the income tax upon the income of these two persons is 10%. So in case of Mr. A, the tax liability will be 10% of his income, that is rupees 10,000. And in case of Mr. B, the tax liability will be 10% of 2 lakh, that is 20,000. Okay. You can clearly see that with the rise in the income, the tax liability also rises or increases or progresses. Okay. And this is the reason why direct taxes are considered progressive, because as the income of an individual increases, the tax liability also increases. All right. Now let's consider the example of indirect taxes. So in case of indirect tax also, let's take the income of these two individuals, and let's say the rate of indirect tax or GST is 10%. Okay. Suppose Mr. A consumes the goods worth rupees 10,000, and Mr. B also consumes the goods worth rupees 10,000. Okay. Now the amount of indirect taxes in case of Mr. A is rupees 1,000, and in case of Mr. B also it is 1,000. But the difference is that in case of Mr. B, it is less percentage of his income. The indirect tax forms the less percentage of his income as compared to Mr. A. Okay. So in case of Mr. B, 1,000 forms only 0.5% of 0.5% of his income, 0.5% of Mr. B's income. And in case of Mr. A, it forms 1% of Mr. A's income. So you can clearly see that where the income is lesser, the indirect tax percentage of indirect taxes is higher. Okay. Or alternately, you can say that as the person gets poorer, the tax liability, the indirect taxes as a percentage of his income increases. Okay. And this is the reason why its burden is more on poor than on rich, and it is called regressive. Okay. Now, let's take the next distinction. So, direct taxes are levied on the incomes and property of a person. Okay. Indirect taxes are levied on goods and services on their sale, production, imports, and export. All right. Direct taxes are compulsory and cannot be escaped. We have already discussed this in the definition of taxes. And in case of indirect taxes, this can be avoided by refraining from the purchase of goods whose price contains taxes. Okay. So there are some of the essential goods on which indirect taxes are not charged by the government. So if an individual tries to consume such commodities more as compared to those commodities on which tax is charged, then definitely they can save a substantial amount of indirect taxes. Okay. The example of direct taxes are income tax, corporation tax, wealth tax, gift tax, etc. And in case of indirect taxes, as we have already discussed, it is goods and service tax. Okay. All right. Now let's quickly see the implementation dates of GST. Implementation date of GST, or you can say timeline of implementation date of GST. All right. So the idea of GST was very first presented by the Union Finance Minister in 2006 to 7 in his budget speech, and he also decided that on 1st April 2010 the GST will be implemented across the nation. And in 2009, the empowered committee comprising of finance minister from different state presented its first discussion paper on the proposed GST regime. Okay, so the amount of taxes and the percentage of taxes were all there in the first discussion paper. Now in 2011, introduction of 115th Amendment Bill, which eventually lapsed due to differences of opinion. So you can clearly see that as it was decided earlier in April 2010 that GST will be implemented. However, in 2010, the GST was not implemented, it was postponed. And the reason of postponement was the differences of opinion between the central government and the state government. And in 2014, again, 122nd Amendment Bill was presented in the Lok Sabha. Now, this was presented due to the conciliation of differences between the central government and state government. All right. In 2016, the GST Council had its very first meeting. In 2016, the GST Council was formed, and it consisted the uh, members, or you can say finance minister from different states and union finance minister also. So they had their very first meeting in 2016. And in March 2017, the GST uh, Council proposed various types of GST for the very first time, that is CGST, SGST, IGST, and UGST. Now, again in April 2017, now the Act is passed. The GST Act was passed in April 2017. And on 1st July, the GST law was introduced all over India except for Jammu and Kashmir. And on 7th July 2017, GST law was passed and adopted by Jammu and Kashmir also. So this date, 7th July 2017, is considered the most important date as far as the implementation of GST is concerned, all right, because the GST was implemented across the entire nation. Okay. Now let's see the meaning of GST in terms of Constitution of India. Okay. So under Article 366 12A, 12A of Indian Constitution, the GST is described as any tax on goods and services except liquor, or you can say alcohol, for human consumption. So this is the definition that is given by the Article 336 12A of Indian Constitution. Okay. So this is the definition of GST. It says that the GST is any tax on goods and services, all right, on goods and services except liquor or alcohol for human consumption. Now, why liquor or alcohol for human consumption is left out? Because the power to charge taxes on liquor is still with the state. Okay, the state will decide the percentage of GST that will be charged on the liquor. All right. Now the next property of GST is that it is a comprehensive tax. Comprehensive tax. Now, why it is a comprehensive tax? Because all types of indirect taxes that were charged earlier in India are now subsumed into GST, or you can say are now consolidated into one tax that is known as GST. And this is the reason why GST is called as comprehensive tax. Okay. And due to this reason, it is also known as one nation, one tax. Okay. Because different types of taxes are now subsumed into GST. So let's quickly see what type of taxes are now the part of GST. So here we have central level taxes and state level taxes. Okay. In case of central level taxes, it is central excise duty, additional duties of excise, additional duty levied under Medicinal and Toilet Preparation Act, additional duties of customs, countervailing duty, and special additional duty, service tax, surcharges, and cesses. So these are the various type of taxes which was charged earlier by the central government and are now integrated into GST. And in case of state level taxes, state VAT or state value added tax, central sales tax, purchase tax, entertainment tax, luxury tax, entry tax, taxes on lottery, etc., are now the part of GST. Okay. Now let's see what is the classification of GST. Now we will discuss the classification of GST. See, GST is broadly classified into two categories, that is intrastate GST and interstate GST. Okay. Now, in case of intrastate GST, when goods are when goods or services are sold within the state, then it comes under the purview of intrastate GST. And when goods or services are sold between the states, between two states, okay, then it comes under the purview of interstate GST. Okay. Now, in case of intrastate GST, we have two types of GST, that is CGST and SGST or UTGST. Okay. And in case of interstate GST, we have IGST. Now, CGST is the abbreviation for Central Goods and Service Tax or Central GST. SGST is the abbreviation for State GST. UTGST is an abbreviation for Union Territory. Union Territory GST. IGST is an abbreviation for Integrated GST. Now let's understand what these terms means. Okay. Now, in case of central GST, we have two cases further. Okay. And that is input GST and output GST. In case of SGST also we have, or UTGST also, we have two cases, that is input SGST and output SGST. Okay. And same goes for Union Territory GST also. Okay. In the case of Union Territory GST also, we have input UTGST and output UTGST. In case of IGST also, there are two cases only. Input IGST and output IGST. Okay. Now, what that means, what this input output means, when the goods are purchased, then our input GST is charged. When the goods are sold, then output GST, or you can say output central goods and service taxes is charged. So in case of purchase, input CGST is charged, and in case of sale, output CGST is charged. Okay. The same goes for state GST also. In case of purchase of goods, input SGST is charged. In case of sale of goods, output SGST is charged. For UTGST also the same approach. Output for sale and input for purchase. For integrated also, when we purchase the goods, then input IGST is charged, and when we sell the goods, then output IGST is charged. Okay. Now, input CGST is considered as an asset, and output CGST is considered as a liability. Okay. Why it is so? See, GST, when GST is paid in case of purchase of goods, then this amount is deposited into government account. Okay. And when the goods are sold, then the GST is collected. Okay. Now these two are subtracted from each other to find out the final indirect tax liability of a person, all right, or of a seller or manufacturer. Okay. Now let's see how this actually works. Suppose Mr. A uh, sells goods to Mr. B, all right. Now Mr. A sells the goods worth rupees 1 lakh to Mr. B. And let's also suppose that the amount of GST is 12%. Okay. So Mr. A will collect rupees 12,000 as GST from Mr. B. Okay. So Mr. B has actually paid to Mr. A rupees 1 lakh 12,000. All right. Mr. B has paid 1 lakh 12,000 rupees to Mr. A. Okay. The goods have the worth rupees 1 lakh, and the GST that was charged was rupees 12% of 1 lakh. All right. Now, in this case, Mr. B can avail the benefit of rupees 12,000 when he sells the goods to the consumer. Now let's suppose that Mr. B sells it to consumer Mr. C. Okay. So let's say Mr. A is a wholesaler, Mr. B is a retailer, and Mr. C is consumer. Okay. So Mr. A as a wholesaler sold goods to retailer Mr. B, and Mr. B sells it to Mr. C. Okay. Now for Mr. B, since he is a retailer, he will also collect the taxes, and he will also add some profit on rupees 1 lakh first of all. So let's say he added profit of rupees, let's say 10,000. Okay. Now, on rupees 1 lakh 10,000, he will collect 12% GST. Okay. So also add GST at the rate 12%. Okay. So that will be 1 lakh, 13,200. All right. So he will collect from Mr. C rupees 1,23,200. That is the amount that Mr. C will pay to Mr. B. Okay. Now let's understand how the GST becomes asset and how it becomes liability in each cases. All right. So when Mr. A sold goods to Mr. B, he collected rupees 12,000 from Mr. B as a tax. So Mr. B, in this case, is a purchaser and has input GST of rupees 12,000. Okay. Mr. B purchased the goods from Mr. A and paid the taxes worth rupees 12,000. Okay. So he has an input GST of 12,000. Now he collected rupees 13,200 as a tax from Mr. C. All right. So because he collected that much tax, so his output GST is 13,200. Now his net tax liability, his net tax liability for GST will be tax liability for GST will be 13,200 minus which he already paid to Mr. A. He will avail that benefit and it will be deducted from the output GST that he collected from the consumer. So he will pay rupees 1200 to the government. Okay. To the government. All right. So this is how GST works. Okay. Output GST, since he collected it from the consumer and it belongs to the government, becomes the liability. Input GST, since he purchased and already paid to the government, it becomes his asset. It becomes asset and this is a liability. Okay. Now that's how GST works. Now one more thing that you must have noticed that Mr. B has paid 1,12,000 to the wholesaler, Mr. A, but the profit is not charged on 1,12,000. Okay, or the tax is not charged upon tax. Okay, Mr. B simply added his profit of 10,000 on purchase of rupees 1 lakh, and he calculated the GST on 1,10,000 directly. Okay, and this is why the GST also removed the cascading effect. All right, earlier the tax were charged upon tax, but GST, since it allows input tax credit, okay, has removed the cascading effect. Okay, and this is a very crucial advantage of GST. Okay, and this is how GST works. So let's quickly understand how the cascading effect was a problem earlier. So when goods are sold, let's say rupees 1 lakh worth of goods were sold, and let's say as per the earlier taxation system, the sales tax of 10% is charged on 1 lakh. So 10,000 is added here. Now the value of goods became 1,10,000. Okay. Now suppose VAT is charged, value added tax at the rate 10% again is charged. So the VAT is not charged on rupees 1 lakh. The VAT is charged upon 1 lakh 10,000 rupees, including the value of sales tax. Okay. So it becomes 1 lakh. It becomes 11,000. Okay. Now the total value of goods became 1,21,000. Okay. And this is the reason why the earlier taxation system was removed. All right, because it contains the comings of cascading effect. Okay, and the GST has removed such cascading effect, as is evident from this example. All right. Okay. So this is it in this discussion. We will discuss much about GST in our later session. We will see the accounting treatment and various tax slabs of GST.